This is Jason Burek of Wall Street for Main Street. Welcome back to another Wall Street for Main Street podcast interview. Today's special guest is a first-time guest. He's a derivatives trader and consultant in the realm of economics, finance, blockchain, and Bitcoin. He hosts the Crypto Scam podcast, and he's a contributor to World Crypto Net. He's also a former VP at JP Morgan. He worked on Wall Street for around a decade, and he's a blockchain Bitcoin consultant. Tone Vays, thank you for joining me.
Oh, no, thank you for having me on. Looking forward to this.
Yes, and I've watched a number of your great YouTube channel. You do live streams with Jimmy Song, who's a cypherpunk, so that was interesting. You do a lot of interesting content over there. Over 60,000 subscribers on your YouTube channel in a very short amount of time, so congratulations there.
Thank you.
Now, since you've worked on Wall Street for a long time, there's been a lot of articles, Tone, that have come out about Bitcoin and blockchain for, I don't know, the last 6 to 8 months. And some of them from Wall Street people either love Bitcoin and blockchain or they absolutely hate it and call it a Ponzi scheme and a total fraud, a total bubble. So based on the people you've talked to on Wall Street, what do you think are some of the main opinions there towards Bitcoin and blockchain?
I think there is just a huge misunderstanding, not only on Wall Street, but in the general public, as to what blockchain can and can't do. And not only that, a huge misunderstanding of even what the definition of a blockchain is. I mean, you can ask a dozen people that are in the blockchain space for years now, and you can get, 5 or 6 different definitions of what a blockchain is. Now, I understand why the traditional Wall Street guys don't really like Bitcoin, other than, privately putting some of their money in it, other than, and publicly not being very happy with it, because it doesn't really fit. The way I try to define blockchain is this innovation from Satoshi Nakamoto, who solved the double spending or the Byzantine generals problem, however you like to call it. It was basically a computer problem that you couldn't send data from one computer to another while losing possession of that data. That was the computer science problem. And Satoshi was able to solve it with proof of work, with mining, by creating this element of competitiveness to hunt for those Bitcoins that are giving you value. And somehow, I know how, because of that, we now have this scarcity, a digital scarcity, that is used as money to send finite transactions that are immutable, unconfiscatable, and it pretty much serves like value and money. And somehow everyone is trying to apply that to what they want it to do, and it just doesn't work. So what a lot of people call blockchain is simply a database. It's a database with multiple admins, or it's a Excel spreadsheet as a Google document with multiple people having the ability to edit those cells and a much larger amount of people having the ability to look at those cells with proper permissioning. And to Wall Street, or like many other facets of the economy, that is what a blockchain is to them. And I completely disagree with that, but this is what we're dealing with.
So you were featured in the documentary Magic Money, the Bitcoin Revolution, and you said something very interesting in there for listeners. They can go watch the documentary for free on YouTube after this interview. I'll put a link in the info section. But you said that financial privacy is the best component of Bitcoin and blockchain technology. So on the internet, Tone, everyone's aware of this. There really is no privacy. So why do you think that blockchain technology and Bitcoin will change this?
Well, because it finally separates governments from money. And that's important. Like, the internet did as best of a job that it could in separating governments from information. In the world of the internet, governments have a harder time controlling what information gets out. And I'm just saying harder time. It's not always perfect. But today, if you see something happening and you shoot a video of it, that video can go viral way faster than any government can censor that video or stop it. That internet went a long way in helping us do that. And governments are now adjusting accordingly, and people watch what they say even more and how they do things publicly, because anybody can record it and anybody can put it on the internet. But governments have always had the control of money. And that's the part that Bitcoin and the blockchain, I believe, is going to change. I really don't think the blockchain is going to change much else based on my personal definition of blockchain. I don't believe it's going to change real estate. I don't believe it's going to change the medical industry. It's not going to change the supply line management. I don't think the blockchain is going to change any of that. But what it will do is it will put, I'll give the confidence to the people that the money that they have is not confiscatable. And they can be more cavalier as to how they live the rest of their life, knowing that no government bureaucrat can seize control of their assets. And that is, I believe, extremely important. And that's what I meant by that statement. And it may take another generation of people to fully realize what happens when you've worked your whole life and now you have money and you are in control of that money. And it's not sitting at some, company's 401k plan where you're at the mercy of decision makers. And it's not sitting at some bank like what happened in Cyprus or in Greece, where the government just decided to take that money or to block the accounts and you have to beg for your 20 euros a day, like in the case of Greece. So when people have full control of their money and they know that they can use their own money in any way they see fit, I think this will go a long way where people can choose and vote with their money as to who they want leading them, as opposed to being scared and having that money be confiscated.
It seems like the new normal that a lot of governments, a lot of central bankers, a lot of economics professors, academics are talking about is, whether it's Thomas Piketty writing about governments need to join together for a global wealth tax, or academics like Ken Rogoff talking about either banning cash or negative interest rates. So you're saying that blockchain technology will prevent these things from happening then, where the government at a whim could just say, okay, well, we're going to increase taxes, or you spoke out against us, so we're going to block your bank account.
Eventually. I believe that is assuming the Bitcoin blockchain as a technology remains stable. I believe that's where we're eventually headed. In the short term, however, it's not going to be easy and it's not going to be clean. And in the meantime, the governments do want to eliminate cash. And some people see something like Bitcoin as this Trojan horse that's going to help the governments eliminate cash, with Bitcoin making people more comfortable with using digital forms of money. And that allows the government to eliminate physical cash even faster. And then people think that the government will be able to coerce the Bitcoin network in order to take control of Bitcoin. Now, I don't believe that is going to happen. And I don't think it can happen technologically. But we all know, propaganda works. And it doesn't take long for people to kind of hang themselves in a way and give up control of something to an entity they should not give up control to, especially when you don't know who the next person in control is going to be. So I believe that Bitcoin will remain decentralized, and it will prevent the government from doing crazy things with the money. But can Bitcoin lead the government into eliminating that cash faster? It probably could, and I think that's a good thing. I think the faster cash is eliminated, the more people will realize how important Bitcoin is, because it is cash. And it's even better than cash because you can use it not only person to person, you can also use it online without being there in person.
And also, to add to your points there, whether you're a citizen in Venezuela or China or Zimbabwe, if your government is implementing either capital controls or devaluation or hyperinflating the currency, it gives you a faster option to, get your money out of the banking system in those countries to protect yourself.
Absolutely, but it's also really important to have that Bitcoin before it happens. Like, Bitcoin was totally useless for Greece the day the bank shut down. You needed to have it beforehand. And if the same thing happens in Italy or another European country, you needed to have that Bitcoin beforehand. So the time to buy it is before the event, not during the event. During the event, you have no money to buy anything. You want to buy food with something.
So let's transition now to the initial coin offerings. So the SEC has started cracking down a lot on initial coin offerings, but the last couple of years were crazy. I heard of, I've met entrepreneurs in hoodies who have raised all kinds of crazy amounts of money. So do you think the ICO bubble has already burst?
Unfortunately, it feels like the ICO bubble is only getting started. As much as I was not happy about seeing it, and I thought that it was the stupidest thing in the world, and I thought nobody can ever fall for this, I have now gone full circle, and I now understand how in the late 90s, .coms with no business model, no clients, no revenue, no developers, just a fancy website, was trading on the NASDAQ for $100 a share. I now understand that because I'm living it. I think every single ICO is pretty much, there's nothing there. The only thing ICO revolutionized is a way to separate unqualified investors from their money. And again, I think the SEC is going to get to it way too late. The SEC is going to show up after the bubble bursts, and they're going to make bad decisions on the back end when they should have prevented these ICOs a year ago when Ethereum came out. So Ethereum was a very bad ICO, and in my opinion, I felt that Ethereum was an unlicensed, unregistered security. And I spoke out years ago. I never liked it. I thought it would be bad for the ecosystem. And the only thing Ethereum managed to revolutionize is build a platform for people to print their own money or make their own securities, which is what an ICO is to me. An ICO is basically a company that cannot get any funding from a VC, but instead they're going to the unqualified investor. They're getting in way more money than they deserve and giving absolutely nothing in return other than some digital security that they write on paper will do this, this, and that, when in reality the token itself is needed for nothing else other than raising funds. And while the ideas behind a lot of these ICOs are debatable, and I will by default argue that the idea doesn't even make sense, but at least the idea that they have is debatable, the fact that you are resorted to an ICO funding model to me is not really debatable, and I haven't seen much difference in 99% of all the ICOs I've looked at. And I've stopped looking at the ICOs recently because I've looked at hundreds last year, and to me they were all scammy. And so there's absolutely almost no reason to look at any other ones. I'm sure I'll be wrong on 1 out of 1,000 ICOs, but I'm more than happy to be wrong on 1 out of 1,000. I've stayed away from the space the whole time, and it doesn't feel like it's starting to slow down. And the only ICOs that the SEC has gone after are the ones that are so blatantly scammy that I don't think any lessons are being taught here.
And to add to your points there, when you take a company public, the way the initial public offering or IPO market is set up, that the venture capitalists, the lawyers on Wall Street, the investment bankers, they're the middlemen. They all make big, big bucks in this process. Packaging the company and moving it up the chain to the retail investor for initial public offerings. So with these initial coin offerings, they were eliminating the middlemen. The middlemen are not going to stand there and take it. That's a lot of profits for them, billions of dollars that evaporated. So they're gonna fight the lawyers, the investment bankers, the venture capitalists on Wall Street and in Silicon Valley. They're not going to allow. They're gonna complain to the regulators. There's gonna be a whole new sets of stuff to funnel those profits back to them again.
Probably, but the thing is, I'm still trying to figure out what did the ICO innovate, because all of the ICOs, the only thing they're doing is revolutionizing how you fund your company. And you're basically funding it with unqualified investors. Now, there are some laws on the books that the U.S. government has passed that has opened unqualified investors to speculative investments. Those are some of the more recent regulations. But the ICOs have taken this to such a level that we'll see how it all ends. But to play my own devil's advocate, I understand why everyone wants to ICO. If you are a very competent company and you crashed and clawed your way to $100,000 from prominent VCs that demanded 20 or 30% of your company for a few $100,000, and you're watching a couple of incompetent guys with the same idea as you getting in tens of millions of dollars by giving up zero equity in the idea, you are forced to also ICO and not just, give up your idea.
Well, that was the past. Going forward, Tone, I don't think that's going to be allowed anymore. So I think, they're obviously crowdsourcing in general for small amounts of money, I think is good. But the initial coin offerings, the amount of money that was raised by a lot of these companies with no legitimate business model, like you said, was really just head scratching. Well, but I think there is a future.
Sorry, I know I'm interrupting, but I recently saw the Senate hearings where one of the lawyers speaking to the senators says that, well, the SEC should be doing something about this, and the senator goes, well, we have a statement from the head of the SEC, and the head of the SEC says that he has no jurisdiction to go after ICOs. And to me, this is, very troublesome, because either, to me, it sounds like the head of the SEC is being lazy and he doesn't want to learn new technology to where it breaks down to simply funding, or they want, the government to pass a bunch of draconian laws so that they have jurisdictions over all digital assets.
There's a bunch of regulatory agencies fighting over things, whether it's the CFTC, the SEC, a couple other regulatory agencies. So it's very frustrating. The amount of compliance that should be spent is going to be well over $1 million going forward. But a lot of the entrepreneurs in the past with the initial coin offerings didn't spend any money with regulatory compliance. So, but that's no longer going to happen. So you have said that every other cryptocurrency besides Bitcoin is a scam and that they will ultimately fail. Why do you think that? You don't think that there is legitimate innovation in some of these other altcoins?
I don't. I really, really don't. Again, if I start making analogies with the internet, which could be potentially dangerous, there's really not much innovation going on with building a website. The innovation was the TCP/IP layer of the internet that allowed you to build that website. It wasn't the website itself. And this is why we had that giant bubble and almost everything disappeared. And the only companies that remained, I mean, look, Amazon wasn't all that innovative. It was, it's just catalog sales of items on the internet, right? I mean, Netflix is Blockbuster, but on the internet, right? It was basically, again, same thing with eBay, auctions, but on the internet. It was basically the companies that were able to utilize the internet properly that succeeded, and succeeded very, very well. I see blockchain as the same way. I don't see competing blockchains in the way I don't see competing internets. And we started out with some competing internets, and that didn't last very, very long. So to me, whichever company is utilizing the Bitcoin blockchain properly, those companies are going to succeed. But the company itself isn't a competitor to the internet. It's who can utilize that internet. And when it comes to a lot of these altcoins, there's a handful that are not scams because they were also started in a similar way to Bitcoin, where there was no printing your own money for yourself. There's a very few of these things, like Litecoin or Monero. There's a handful of other cryptocurrencies that do not involve the creator of that currency printing money for themselves, which almost everybody else is. Like Zcash prints money for themselves with a minor reward, and any ICO is just printing money for themselves. Some of the hard forks are doing that as well. And in addition, the smartest people are coding on Bitcoin. That's where all the innovation is happening. The innovation is a little slow because everyone is actually using Bitcoin. It's very easy to innovate something no one uses. You can change the features all you like. Everything other than Bitcoin is pretty much centralized. There is a person in charge. There is an organization in charge. If your alternative crypto has a face to it, that's not an anonymous entity that that can no longer be spoken to, you're a centralized project. And a centralized project can go away faster than it was created. Most of these things are closer to e-gold or straight Ponzi schemes than they are to anything innovative like Bitcoin. The Bitcoin core developers haven't even considered putting anything from any other coin into Bitcoin. But Bitcoin's innovation has been used throughout the whole ecosystem for a lot of other projects. I just don't see it. And in addition, everyone is incentivized to tell you how, their investment is better than Bitcoin. To me, someone trying to sell me or you on an altcoin by talking about how much greater it is than Bitcoin is someone trying to sell you a penny stock talking about how it's the better Google.
So you think then that how Bitcoin has lost more than half of its dominance. Bitcoin was, I believe, 80% or more of the total market cap for all the cryptocurrencies only about 5 or 6 months ago. Now it's down to 36.2 when we're recording this interview on Thursday, May 3rd, 2018. So you think then that a lot of that is just marketing and sales job? There's not a lot of substance to that then?
Oh, absolutely. I absolutely believe in that. Because Bitcoin has Bitcoin has no one in charge. Bitcoin has no, foundation with money that it prints for itself. All of these other initiatives, from Steemit to Dash to IOTA, I can name them all day. They're printing money for themselves, and they're spending that money on advertising, trying to just pump the coin. This is the bubble. I really don't want this generation to be known for a bubble that was crazier than the tulip bubble, but all signs are pointing to just that.
What's your opinion on Lightning Network and atomic swaps? So Lightning Network went live a couple months ago. It's making some progress. Are you optimistic on it that the bugs will be worked out, or do you think then that it's going to fail?
I'm very optimistic about the Lightning Network. There's multiple Lightning initiatives. There's Lightning Labs. There's a Lightning project coming out of Blockstream, and there's one more. I can't even name them all. Once segregated witness got into the code, everyone started programming for Lightning, and these initiatives will be compatible with each other. And Lightning is supposed to give us scaling. We're finally going to have micropayments. We're finally going to have cheap transactions on Bitcoin, even though since the spam stopped, once Lightning started to get developed and went into beta, transactions on Bitcoin have been very, very cheap, but they're going to get even cheaper. So I'm very optimistic there. As far as atomic swaps go, they're not really, as far as the atomic swaps go, they're, on that front, that one isn't really interesting to me. Because again, I don't expect any of these altcoins to survive. Or I expect the separation from Bitcoin from all of these altcoins, maybe not in market cap, because, hey, if you create 1 billion coins of something, you sell one to your friend for $1, you now have $1 billion market cap altcoin. So it's a very bad metrics to judge Bitcoin on. You really got to look at economic activity, not trading activity, but economic activity. You got to look at how many of those transactions are actually used in commerce, how many of those transactions are actually used for something tangible other than speculative trading. Those transactions don't really count. And Bitcoin will continue to separate from all of those initiatives. So having atomic swaps isn't really important to me because all they're doing is basically unregulated trading. I still say that one of the reasons why the dot-com bubble blew to such proportions was because of online brokers like E-Trade and Scottrade, where for the first time, that taxi driver, that barber, that shoe salesman, they had access to be traders from their own house, which hasn't happened before. And now with crypto, 12-year-olds are able to trade, though more and more exchanges are becoming KYC'd. But now you have this whole global initiatives where there is no border, there is no jurisdiction. So a lot of people are becoming traders. I've never seen this many traders that have absolutely no trading experience whatsoever. thinking that they're traders, and they're inexperienced, and they can blow this bubble to unreasonable levels, and no one can actually predict the top of a bubble. You almost have to get lucky. So to me, having atomic swaps between instruments that are totally useless in the long run isn't very exciting to me, and it's not all that relevant in the long term.
There's a lot of people, especially in the United States and also in Asia, where Bitcoin and cryptocurrency trading is very popular, that are very pro-technology, so there's a technology bias. A lot of the younger millennials in my generation, they play video games either on their phone or on their computer or a video game system, and they buy things in the video game, so they're used to paying. So that may be one of the reasons why they're adapting to trading cryptocurrencies so quickly. So basically then, if I could summarize your views on some of the altcoins, you would say that while some of these coins like Monero is promising privacy innovations, EOS and Cardano are promising innovations to Ethereum, they promise things, but they actually haven't delivered on anything yet. There's no real innovation there, even though they've promised it.
Well, those are very, very different, but I mean, there's some innovation in going on in Monero with their privacy, but that innovation comes at a great cost. It makes transactions very large. It makes transactions very hard to scale. And even though you can have innovation on a small scale, it doesn't scale to the global area, which is why Monero is going to struggle. There's also a conceptual problem. I don't know if I want Bitcoin to have fungibility at the protocol level by default, like full anonymity. I would love to see anonymity as a secondary layer that people can use by using certain Bitcoin wallets to send anonymous payments. Because the problem with having anonymity at the protocol level, it all of a sudden makes it very hard to find out what's happening under the hood. And if anyone is scheming the system under the hood, when everything under the hood is, being obscured, let's say, for example, it'll be very hard for a mechanic to fix your car if you opened the hood and you couldn't see what was going on. So there is a trade-off there. As far as Cardano or EOS or Ethereum competitors, that's a completely different ballgame. Bitcoin simply gives the people an ability to decentralize the way data is being sent. And it's being used as money because our payments are centralized. The problem with these initiatives, besides the fact that they're overly complicated and probably will not scale, like EOS or Ethereum or Cardano, is that they're trying to convince the world that smart contracts need to be decentralized. And I don't agree with that premise. I don't believe that smart contracts need to be decentralized. I like smart contracts. Smart contracts are great. They will take out a lot of middlemen that are responsible for executing those contracts. But when you can try to convince the world that you need decentralization, you're trying to convince the world that contracts are being censored by government entities, but they're not. And in order to decentralize those contracts, it requires a gross inefficiency of technology. Bitcoin is pretty damn inefficient, but it's absolutely necessary. And this is what people try to demonize Bitcoin for. Bitcoin is too slow, it's not anonymous, it's too expensive. But you know what? It gets the job done in the most decentralized way possible, because decentralization is inefficient, and it is slow, and it is expensive. And this is why most people don't use a browser like Tor, which is way more decentralized than a browser like Safari or Chrome. But none of us really use Tor because it's very slow and very inefficient, but it's decentralized. That's the trade-off. So if you think your contracts are going to function better in a decentralized way, I think it's just people selling you snake oil. You decentralize in order to prevent censorship. If no one is censoring you, centralization will always get the jump done faster and cheaper and better. And this is my problem with all of these smart contract decentralized platforms, besides the fact that they are printing their own money in the form of security in order to finance the operation.
That's very interesting. So you're in favor of proof of work with Bitcoin, because I've heard people describe this as Satoshi thought about this, and this is kind of a game theory component where with proof of work and how Bitcoin is slow verifying transactions, this prevents, that 51% attacking from someone being able to basically game the entire blockchain on Bitcoin?
I mean, it's a lot more complicated than that, but that's the idea. The idea was to build a system that wasn't instant, and it wasn't cheap. And look, Bitcoin is very inefficient. Look how much electricity it burns. And, those that want to pump their own coins use that as an excuse of how Bitcoin is destroying the environment with all that electricity. But it's absolutely necessary. I always say that if the government wanted to eliminate Bitcoin, it's simple. All you have to do is eliminate all money laundering laws and treat money like a person's property, like their arm, not their property like their house that they can still take away if you don't pay your taxes, or if basically one country takes over another country, right? They just take the land. If the government was to treat Bitcoin like property, like a person's arm, that they can't take away their money, and they're going to allow this person to spend that money in any way they like, and they're not going to stop them, Bitcoin will be almost useless. Because I'm sorry, the banks can do instant payments. There's no technological barrier to stop instant payments. There's no technological barrier to prevent finite payments that you can't, charge back. Those are all regulatory issues, and these regulatory issues can go away. It's not the finite supply of Bitcoin, being 21 million Bitcoin, that gives Bitcoin its value. It's the fact that we have money laundering laws, and we are not in control of our own money. And the government, on top of that, prints money in an irresponsible way.
Agreed. And the banks were also lazy with the innovation. We know that they could do it. They just didn't want to spend the investment. Now they have something called Zelle, right, which you can send instantaneously a payment from your smartphone. I could pay you with Zelle back and forth. So, that wasn't available in the future. Maybe Bitcoin and blockchain and all these other cryptocurrencies are forcing the banks to innovate. And as someone who likes free markets, that's what I want to see. I want to see competition.
Oh, correct. And this is where the word blockchain gets used all the time for these initiatives between banks, where in reality, there is no proof of work mining element to it. So to me, it's not a blockchain. It's just a database. It's a permission database. It's they call it decentralized ledgers, or whatever they like to call it. They're calling it a blockchain, but all it is, building a more useful database to share information. But the true innovation is this mining that burns electricity for proof of work, that makes it so difficult to infiltrate and corrupt and take over.
That's a very interesting explanation. I haven't heard it anyone else explain it that way. Another thing that requires a lot of hard work, a lot of energy in order to mine and get out of the ground is gold. So do you think that Bitcoin complements gold, or do you think that the goal of Bitcoin was to replace gold or compete with it?
I think gold played some role in creating this digital asset of Bitcoin. And I was a gold bug at one point, believing that gold and silver should be money again. And I have now stepped back from that. I don't see the world ever going back to a gold standard. I think the technology has moved so far beyond using gold as money. Not to mention, one of the best properties gold ever had was cross-border value transfer for thousands of years. If you needed to leave where you lived due to political stress or wars, you would, take your gold, get on a horse and leave, and, take your gold with you. That has become very, very difficult because of technology and metal detectors. So the best property of gold, being this cross-border value transfer in time of stress, has completely disappeared. Not completely, but mostly disappeared. And Bitcoin takes its place because you can move your Bitcoin in your head, and it hopefully will even rise in value while you're moving it across borders. Because, again, Bitcoin has nothing but gone up in the last 9 years of its existence. Right now, we're in a little bit of a downturn, but I think it's going to reverse eventually, and we will make new all-time highs. And I just don't see a gold standard. And having a finite supply of Bitcoin may or may not be a good thing. You know, the jury is still out whether deflation or inflation is good. And all currencies throughout the history have always gone the route of inflation. It also always ended badly. But it doesn't mean that that isn't, you know, how the direction things will always go to. I will also say that people that believe in the finite supply of Bitcoin should not believe in any altcoins, right? Because to me, if you think that Bitcoin and Litecoin or Bitcoin and Monero can both coexist in the future, then you don't really believe in the finite supply of a coin. You might as well just inflate Bitcoin instead of having a stable, lesser secure competitor.
I personally think that gold and Bitcoin complement each other because, you know, we're in this Keynesian central bank experiment with debt-based digital fiat currencies where basically if the Federal Reserve or the Bank of Japan or the European Central Bank sees one of their own banks in their own countries in trouble, they can just create digital currency units on their keyboard, hundreds of billions or $1 trillion out of thin air. And so people are going to have to figure out ways to protect themselves from, you know, losing purchasing power. So I think, you know, we don't know exactly what the future is going to be, what the governments or central banks are going to do. And I think Bitcoin and gold and silver complement each other in that regard.
Yeah, no, and that's fine, and that's great. But throughout history, gold and silver has always been a terrible investment. Investing in the stock market, in the private sector, has always been a better investment because your stocks will also adjust with inflation and the money printing. Because as inflation goes up, Apple will charge you more for that iPhone. Apple will make more money, and Apple stock will adjust accordingly. But the S&P 500 will kick out inefficient companies and add efficient companies in that will continue going up in price, where gold just sits there.
We'll have to see about that, Tone, because you are right. Up to a certain extent, the stock market does adapt and companies do adapt to inflation. But if inflation gets out of control, you have stock markets like in Venezuela and Zimbabwe that are going up really, really high in nominal terms. But in real inflation rate terms, they have not kept up with the real inflation rate.
Well, that's also because their companies aren't doing much on the global level. But if you did have your Zimbabwe, if every Zimbabwe dollar you had was sitting in the Zimbabwe stock market, you probably did better than the average guy in that country.
Maybe by a little bit, but then, you know, it didn't keep up with the real inflation rate. So we'll have to agree to disagree on that. But you have some very interesting views, Tone, in terms of Bitcoin and cryptocurrencies. You have a weekly show with Jimmy Song, right?
Yes, every morning we do a Bitcoin morning brief where we cover Bitcoin news. Me and my co-host Leah, along with Jimmy Song and Giacomo Zucco, as various guests on that show as often as we can get them.
So the Bitcoin price has rallied pretty strongly since it got almost down to $6,000 per coin about a month or two ago. Do you think it's going to consolidate still in a trading range for at least the next couple months before maybe it starts to make a move higher again?
I am still very skeptical that the bottom is in. I have remained skeptical ever since we double bottomed in the $6,000 area. When we bounced off of 6,000 back in February, I was pretty optimistic and bullish. But when we got rejected in the $12,000 area in March and went back down to 6,500, I pretty much turned bearish once again. And I have not yet been convinced that we are out of the woods and ready for new all-time highs. At the least, I'm waiting for a significant pullback that will prove to me that all of the people that bought in the last month, driving the price from 6,500 to the 10,000 where we're sitting at today or close to it, that all of these are actually strong hands and not hands that are going to panic sell at first sign of weakness. So I am still expecting a turn back down any day, and I've been expecting it for this entire month. I have not yet, been very optimistic. I'm happy that Bitcoin's going up. I'm happy to pay more of my bills and sell some Bitcoin at these prices. And I'll wait, and if we continue to grind higher, or if we stabilize for a long period of time, I could turn bullish then. But for now, I remain a little skeptical of this up move.
I think one of the reasons the rally was pretty strong was because, it was after tax loss selling for the United States for the IRS tax day on April 17th, and then the other one was the George Soros announcement that he was going to move one of his hedge funds to start buying Bitcoin and other altcoins. So that sparked a rally. People were like, well, George Soros is finally getting in. But in your opinion, what do you think ultimately the cost to mine Bitcoin, the role that will play? So if you're right and Bitcoin does go lower, is Bitcoin going to go below the cost of production for the miners and stay there for a while? Or do you think that that's going to be the new floor, whatever the marginal or average cost of mining Bitcoin will be?
Well, no one really knows what the average cost of mining Bitcoin is, because some people are mining Bitcoin at a significantly cheaper cost than others. And also, like people like myself, I have one miner running, and like the costs are kind of irrelevant, right? I'm mining to support the system. It's very common that the price drops below the cost of production. This happens in gold and silver all the time as well. And this is how inefficient companies fail and efficient companies go on. I think it's very likely that at some point, Bitcoin will drop below the cost of Bitcoin mining production, but I do not believe it's going to stay there for very long. I think a lot of people will pick up that Bitcoin on the cheap, and more and more people learn about Bitcoin every day and are interested to get in. I just think we went up too far too fast, and because we went up too far too fast, way too many people got very interested in mining once again. Mining has never really been profitable, if mining is still very, very profitable, then the market finds a way to separate incompetent people from their money. And this is another reason why I believe Bitcoin will fall below the cost of production. But how long it's going to stay there, who knows? Hopefully as little time as possible, because the longer it stays there, the more dangerous it gets for the ecosystem.
Yeah, and I hope you're right that Bitcoin, at least temporarily, does go below the cost of production. I hope I have more cash to buy and add to my Bitcoin position.
I agree.
But a lot of commodities do temporarily stay below their cost of production, but they can't stay there. So eventually, the suppliers cut supply, suppliers go bankrupt. So this is a way without regulation, without government regulation and bureaucrats, this is how markets are supposed to work.
Agreed.
But Tone, I enjoyed our conversation a lot. I think you do a great job on your show. And if our listeners want to follow more of your work, how do they do so?
Sure. Mostly it's just Tone Vays across the blogosphere. Look for Tone Vays YouTube channel. You can also find Tone Vays on Twitter. And those are my two biggest mediums right now for getting all my work out. I do videos every day, mostly about the price of Bitcoin and Bitcoin news. And I also interview people, so watch out for those as well. But almost everything is done on the Tone Vays YouTube channel.
Excellent. Well, keep up the good work.
And everything does go to the audio podcast, the World Crypto Network audio podcast. You can catch me there as well for those that prefer just the audio version.
Excellent. Well, keep up the good work, and I'm seeing you all over the Bitcoin space, so you are doing a very good job with your marketing.
Thank you.
Well, thanks again for your time, Tone, and hopefully we can continue this discussion in the future. It's a very interesting space. This is, I don't know if you'll agree with this, but I think this is one of the few industries left on the planet that's actually like very free market. So we're seeing innovation.
I absolutely agree with you. And you know what I learned? Because it's so free market, I have half my day is filled with frustration of people getting scammed by fake Tone Vases all over the internet. And what I learned is a free market is riddled with scammers. Like to the point of where I'm dying to see regulation at this point.
Well, the thing about free markets is the consumer has to be an informed consumer. So they have to do their own due diligence. They have to do a lot of hard work to research a product or service before they buy it. And, you know, a lot of people nowadays aren't willing to do that anymore, unfortunately.
Right. And what happens is I'm getting emails saying, hey, I paid you $1,000 so I can promote my ICO on your YouTube channel. And I'm like, well, your scam just got scammed. What do you want me to tell you?
Wow.
Right.
Yeah, I get tons of spam emails promising me, you know, all kinds of tokens and money if I do a review video. I've turned them all down.
Right.
So it's
right,
yeah,
but what you haven't had is people pretending to be you and collecting that money from those people that are emailing you.
Yeah, no one's defrauded my name like that. I did have a stalker though who created fake profiles of me and was saying all kinds of weird stuff all over YouTube. But yeah, I haven't had anyone pretending to be me and extorting money, defrauding people.
Right. So here's where it gets really bad in the crypto space. There's really in your case, all he can kind of do is badmouth. In my case, he gets to collect payments that nobody can take back.
And then you have a target because you could be sued for it. It's ridiculous.
Right. So, and this is becoming a big problem where I have now turned off comments on my YouTube channel. Because my comments were full of people creating fake YouTubes, leaving comments on my YouTube videos, pretending to be me, trying to get money from people. And they were getting it. Like the space is... And those are just the scammers. But without regulation, I mean, this is how you get all these ICOs. And this is how you end up promising people that they'll be billionaires. There's no such thing as free money. You know that.
Yes, but even with regulation, I mean, the regulators don't stop a lot of the stuff. So I think...
I agree they don't. But you know how everyone is complaining that it costs so much money to do an IPO?
Yes.
Right, because back when it didn't cost a lot of money to do an IPO, Jordan Belfort from Wolf of Wall Street was taking companies IPO by selling his friends and family pre-IPO shares. That's why he went to prison. Like, imagine if anyone can just go public on the NASDAQ. What would happen?
There'd be a lot of companies like in that movie Wolf of Wall Street that pretended to have assets that didn't have assets.
This is exactly what the ICO market is.
Well, you've given our listeners a lot of things to think about, Tone. And you said, I know a lot of my listeners trade cryptocurrencies and altcoins, and some of them, you know, are big speculators and traders of altcoins. So you've given them a lot of things to think about today.
Very cool. Glad to be on. Happy to do a part 2 one of these days later this year.
Excellent. Well, thank you again for your time, and keep up the great work.
Yeah. Bye-bye.
Please like this video, share it with friends and family, and don't forget to subscribe to the Wall Street from Main Street YouTube channel if you have not already done so. We're closing in on the 20,000 YouTube channel subscriber milestone, despite YouTube censorship. And hopefully we'll be able to get to 30,000 or even 40,000 YouTube channel subscribers quickly if YouTube doesn't shut down the channel. If YouTube does shut down this channel, remember to also sign up for the Wall Street from Main Street email list that's on the wallstreetfrommainstreet.com website and will tell you where the videos are going to be uploaded instead of YouTube. Also, if you really like the content and you decide that you want to give a one-time donation, you can go to the wallstreetfrommainstreet.com website where there's different options for you to do so. Or you can become a Patreon contributor. Thanks for listening, and I look forward to providing you guys with some of the best information, analysis, and financial education available out there for free or paid.